and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am your host Pushpendra Mehta. Joining me today is Ben Poole, writer at CTMfile. Welcome back, Ben, to another episode of the Open Treasury podcast.
Thanks, Push. Great to be here to talk through some of these treasury issues.
We truly appreciate your time and insights as we explore critical topics shaping the landscape of corporate treasury management and beyond. In today's edition, we shall discuss 4 topics, namely Ripple to launch USD-backed stablecoin, Taiwan earthquake likely to disrupt chip output and supply chain, major shift in global IPO market share from the past 5 years, and finally, RTP Network breaks instant payment records. Our audience can watch videos on the CTMfile YouTube channel and explore insightful articles, interviews, and industry roundups on CTMfile.com, either by visiting the website or by following the links provided in our show notes. Let's begin today's discussion with our first story, which is about Ripple to issue USD or US dollar pegged stablecoin. Ripple has announced its plans to launch a stablecoin pegged 1:1 to the US dollar. The stablecoin will be 100% backed by US dollar deposits, short-term US government treasuries, and other cash equivalents. Ripple says that these reserve assets will be audited by a third-party accounting firm and it will publish monthly attestations. The stablecoin market is valued at approximately US $150 billion today and is forecast to exceed US $2.8 trillion by 2028. Ripple says it will issue its stablecoin to meet what it sees as clear demand for stablecoins that deliver trust, stability, and utility. The firm says it is committed to regulatory compliance and has a growing license portfolio in key regions around the globe. Ben, you covered the story for CTMfile. Do you think Ripple's stablecoin will fit into treasurers' payments or cash management strategy? In other words, will corporate treasurers leverage Ripple's stablecoin alongside existing payment methods or solutions to optimize their treasury operations?
Well, I think they're definitely pitching this as a move to sort of bridge the gap between traditional finance and crypto. At the start, it looks like they're trying to appeal specifically to financial institutions that are entering the digital asset space, positioning themselves as, a crypto native player that can help banks with tokenized assets and currencies. Interestingly, you mentioned the compliance that they'll need to be in terms of auditing, and they do say that they're kind of going to be transparent with that, have a third-party accounting firm auditing them and publishing these monthly attestations. In the US, the issuance will be dependent on being compliant with individual state regulators because there isn't a federal regulation on stablecoins in the States yet. Unlike, for example, in the EU, where there's the Markets and Crypto Assets Law, or MiCA, which states that stablecoin issuers must be regulated as electronic money institutions. I think there's a couple of relevant areas here for treasurers. One to mention briefly, I suppose, is on the investment side. And while it's not hugely common, some corporate treasury teams do invest in stablecoins. I suppose they've got some of that appeal of crypto without the volatility that often follows on that side. And you noted, Push, that the market valuation of about $150 billion, about 2/3 of that is taken currently by Tether's USDT. And there's also Circle's USDC as an example in there. But clearly, as the statement said, Ripple sees this as an opportunity that they want to exploit. So if treasurers do want to look at the stablecoin market from an investment side, I think it's vital that they have a strong due diligence process that will rigorously examine if their company has the right risk appetite that fits that type of investment product, and how that decision would also kind of line up with the company's overall goals. We often talk about cash buckets with short-term investments. And the approach with stablecoins should perhaps be to have them in their very own bucket and have a very cautious approach to what percentage of available cash is going there. That should be very, very minimal compared to some of the traditional investment instruments, at least to start. Understanding how quickly that cash could be withdrawn, or the stable coin allocation could have the plug pulled and get it down to zero. How quickly can you do that? Knowing that is also vital. But I thought it was interesting that this week we also had a story on the payments side with stablecoins about a partnership between Kyriba, who a lot of people will know as a TMS vendor, partnering with JP Morgan's Onyx blockchain business unit to use the bank's stablecoin to bring digital currency and blockchain to cross-border payments. I think that's probably a more likely use case that we'll see for stablecoins. Obviously, JP Morgan have got their JPM coin, which is like the Onyx blockchain deposit account product. And the partnership means that for the first time, customers can operate their JPM coin blockchain deposit accounts within the Kyriba TMS. So I think that's aimed at enabling treasurers to facilitate real-time cross-border transfers on a permissioned distributed ledger. So this cross-border payment solution that they've come up with is also complemented with real-time payments and real-time bank reporting through JP Morgan's payments API. And the JPM coin also lets treasurers automate and facilitate transactions across borders anytime, 24/7, in real time. And those blockchain deposits accounts use dollars and euros. So it's a great advantage, I think, in the cross-border payment space, where we've seen just constant issues that treasurers have been grappling with for many, many years. And on the traditional finance side, people like Swift are working hard to kind of plug those holes and get cross-border transactions moving a lot quicker. But clearly, I think this is quite a good use case for where stablecoins could play a role for corporate treasurers in the future.
Well, Ben, you made some great points and added a fresh dimension around the newsworthy story of Ripple launching a digital currency tied to the dollar. Let's now shift our discussion to the second topic, which pertains to Taiwan's recent earthquake that may disrupt chip output and supply chains. Taiwan's most severe earthquake for at least 25 years is likely to impact on the supply of tech components such as display panels and semiconductors, analysts said, as the island's manufacturers restore operations at affected facilities. Taiwan plays a leading role in the global chip supply chain as it is home to the world's largest chip maker, Taiwan Semiconductor Manufacturing Company, also referred to as TSMC, which supplies chips to Apple and Nvidia. Work was suspended at TSMC's facility, although reports suggest that its manufacturing capacity was relatively unscathed. Ben, do you think there will be some degree of short-term disruption in the semiconductor supply chains as a result of the earthquake? And is this a stark reminder to corporations and their treasury departments that they need redundancies in their supply chains, focusing on one country, one region, or one company for meeting manufacturing needs is likely to have an unpleasant outcome?
Yeah, I mean, obviously, firstly, our thoughts are with the families of those that died in the earthquake. I think what's remarkable in this case is how few people actually did lose their lives. I think thanks in part to lessons that have been learnt specifically in Taiwan from previous earthquakes. There was a very serious one in 1999. I know they changed a lot of building regulations as a result of that. So thank goodness it was very minimal, the impact on that side. In terms of supply chains, I think, yeah, it's a great point, supply chain diversity that we've been speaking about, particularly when you've got an item as in demand and rare, I suppose, as these chips are. Like, everyone wants them and there's not enough, and trying to find where you're going to get your chips from, particularly for a lot of the US electronics manufacturers that rely on these and, can't deliver their overall product without these chips. So I'm sure the bigger companies in that space will have a lot of redundancies built into their supply chain. Whether you're a company that doesn't quite have the means to be able to do that is something else to consider. But you mentioned TSMC, Push, in your intro. I think something really interesting that came out in the news this week is that company's agreed to increase its US investment by more than 60% to over $65 billion, and they're going to produce the world's most advanced 2-nanometer chips on American soil. Now, that was sweetened with a federal grant from the US of $6.6 billion. But I think it's really interesting that that's happening. It's clearly not just well, maybe pressure from some of those big electronics companies that I was alluding to earlier, the likes of Apple, even Amazon, and the US government as a whole to kind of take that chip supply chain as much as possible in-house. I think that's an interesting story to look into, because there was not only that sweetener, but also $5 billion in loans, and TSMC is going to be able to claim an investment tax credit of up to 25% of capital expenditures as well. So I think that's a really important and interesting wrinkle in this story. But again, just to end on the earthquake, it again highlights the importance of needing that resiliency. So hopefully those that were caught up in this delay do have those backup plans, and if one tap's turned off, they can turn another tap on and have a seamless production as possible, at least in the near future, until the Taiwan manufacturing plants are back to 100% capacity. So I think there's a mixture of sort of home shoring and near shoring and friend shoring all going on, all of our favourite supply chain phrases in this story.
Absolutely, all kinds of shoring. Ben, you've raised some interesting points. Next up, let's delve into the third story, which is about a significant shift in global IPO market share from the past 5 years. This year in IPOs has kicked off on a cautionary, optimistic note, marked by a selective thaw following a quieter period, according to the EY Global IPO Trends Q1 2024 report. The Americas and Europe, the Middle East, India, and Africa IPO markets had a bright start in 2024, increasing global proceeds. However, the Asia-Pacific region started weakly, weighing down the overall global volume. For Q1 2024, the global IPO market saw 287 deals raise US $23.7 billion, a 7% decrease, but a 7% increase year over year, respectively. In Q1 2024, most key IPO markets witnessed many newly issued IPOs whose current share prices surpassed their offer prices. This trend could indicate improved valuations and pricing levels, reflecting growing confidence among issuers and investors. Ben, can you expand upon the reasons behind the uptake in IPOs, particularly the significant growth observed in the Americas and Europe, the Middle East, India, and Africa regions, contrasted with the decline in the Asia-Pacific region? Also, as a follow-up question, do you anticipate that these trends will influence global corporations' decisions regarding capital allocation and investment strategies, especially with regard to China?
Yeah, it's an interesting report from EY. Clearly, the IPO market has seen an upswing in activity so far in 2024. Despite the restrained overall market activity in previous years, there's an uptick in enthusiasm from both IPO issuers and investors, which suggests that there are these shifting market dynamics and perhaps a more welcoming landscape for public listings. The report makes clear that the global economy will remain on like a soft growth trajectory in 2024, with developed markets likely to see modest growth, while emerging markets will stay on a firmer growth path. I think that's a trend that we see in quite a few areas. And of course, we've had stock markets in various major economies already pricing in the expectation of interest rate cuts. So that's something to pay attention to in that side of things. I think in terms of the global areas that we're looking at, just as investors and IPO candidates adapt to the new economic environment of higher interest rates and reduced liquidity, they also need to navigate the tricky geopolitical landscape too, and that's having an impact in different places. We've spoken before, Push, about this year being the year of elections, and elections amplify uncertainty. So IPO candidates will need to closely monitor their outcomes and think about how specific policies could perhaps affect stakeholder interests, and also reevaluate their IPO strategy and timing as necessary. So those are issues that have an impact, as well as the rising importance of things like AI and ESG. Like, all of these things need to be considered. But there's a role for treasurers to play here, I think. They can help prepare their firm for an IPO, such as by helping ensure the financial readiness report is ready. So 3 years of IFRS financial statements will be required at a minimum for this, and additional details and reports might be necessary too. And Treasury also plays a vital role in the post-IPO world. Hopefully that's been a success and it's raised the proceeds that the firm's looking for. But when it comes to investing that cash, there's nobody in the organisation that's got more expertise than the treasurer when it comes to structuring and managing that portfolio, establishing the policy around it, and going forward, maintaining compliance with that policy. So I think it's an exciting time for treasurers that are approaching an IPO or are on the other side of it and are looking at what to do with all that cash. So I just think it's something that this year, particularly with quite a turbulent market, just pay attention. It's one of those things you can never not read enough news reports. You always just keep yourself educated as to what's happening in the market.
Well, that's a really insightful perspective you've shared, Ben. From IPOs, let's move to the fourth news story, which is about the RTP network breaking instant payments records. The clearinghouse's RTP network experienced a record 76 million transactions in the first quarter of 2024, valued at $42 billion. March was also a record month with nearly 27 million transactions, and March 1st is now the single day with the most transactions at over 1.25 million. Ben, what is driving this organic volume growth in instant payments, and do you think this will spur more banks and credit unions in the US to join the RTP network, considering the valuable benefits they can offer their customers and clients either directly or indirectly?
Well, I think it goes to highlight how banks in the US are starting to catch up with their counterparts in certain other areas of the world when it comes to instant payments. And I do think that the launch of FedNow last summer has triggered more awareness among US corporates of some of the benefits of instant payments. And they'll obviously be speaking to their banks about what's possible in that regard. Obviously, that's the other real-time payments network in the US, but I like the saying here, a rising tide floats all boats. So, that competition can be helpful in developing the market and driving it to new highs, which I think we're seeing here with the RTP network records that you covered there in the introduction, Push. I think the news story also mentioned the sharp rise in account-to-account transfers, and A2A transfers are interesting because treasurers can use instant payments to top up accounts for better liquidity management. And instant payments data can also mean that treasurers can have that real-time view on their current liquidity positions without waiting 1 or 2 days, which is great for things like optimizing cash pooling and in-house banking. So I guess treasurers, particularly in the US, as that's where we're talking about for this story, they need to know from their banks what is possible in terms of instant payments, how they can access this, and how the associated data is provided to them. What's the connection between the bank and their own in-house treasury technology. So I think the more that those questions and requests are raised by treasurers, the more banks and credit unions that aren't part of an instant payments network at the moment, particularly in the States, will be looking to see, okay, well, this is a demand from our customers. We need to service this demand. How do we get on board? Are we going to join both? Are we going to pick one? How do we make the distinction between the two? There are some distinctions, but that's up to each individual institution. But for corporates, it's just, if you don't ask, you don't get. So go and speak to your banks.
Well, those are wise words, and that's a valid argument you presented, Ben. Finally, Ben, what is your choice for the biggest or most important story of the past week, and why?
Well, I was just kind of interested in a story that I saw on the BBC News website today with Jamie Dimon from JP Morgan Chase suggesting that US interest rates could rise to 8%. We're all kind of poised, ready for the rate cuts to start, maybe not at the next meeting, but kind of summer looks like that's possibly when the first cut will be priced in. But no, Jamie said that he's thinking that US interest rates could climb to 8% in some scenarios. He said that his bank is prepared for rates to jump because of the persistent inflationary pressures. So I think that's really interesting. In fact, that comes from his annual letter to shareholders. So in that, he states that JP Morgan Chase has a very broad range of rates from 2%, which obviously is the target that the Fed and others, the Bank of England, ECB have as well, all the way up to 8% or even higher, potentially pushed up because of high government spending and the need to curb price rises. So I just thought that was something interesting to flag. Everyone is anticipating these rate cuts are coming. The markets at the start of the year were certain they were coming, a lot earlier than we are even now in April through the year. So just proves that inflation hasn't gone away. The war hasn't been won on inflation by central banks. And it's not just the rate cuts. It's not just inflation that influences the rate cuts. There's all these other kind of areas of data that push into that. And so I think he's just saying We don't know for sure. We are prepared in case it goes to 8% or more, but it's something that I hadn't thought of. And just seeing that in a headline, I was like, oh, hang on a minute. That's a little bit higher than we're thinking at the moment.
We've come to the end of this podcast episode. A big nod of gratitude your way for your valuable and informative analysis. We would also like to thank our CTMfile audience for joining us on this edition of the Open Treasury podcast. Please subscribe and look in the show notes for the article links. Have a wonderful week. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.